Starting.
Excellent.
Hello, everybody, and welcome to today's live event. It is January 24th. I've got Harry with me. We've got a market that's moving, so we're going to have a great session. I like to start all of my videos off with my previous pick. I'm going to do my previous pick from Sunday. I'm going to take a look at my picks from the last live event. Then Harry can show us what he had in mind, and then we can get going. I like to do it this way for one reason. The only way I can build trust with our relationship is to make it easy for you to go back and check what we said was going to happen, what actually happened, and for you to be able to gauge our performance. So you should do that with everyone on YouTube or any source that you use, is to go back and verify that what they're saying is true. So my pick Sunday was a dog. So far, it was Home Depot. It has backed off of the high. Sunday evening, I read that Home Depot had been downgraded by a brokerage firm. And so I posted on Twitter and I posted on the YouTube channel, I would not do that bullish put spread. Let's wait to see what the price action does. And if it comes down to where we can consider selling the 335, 330 bullish put spread for a $1 credit, that's what I'll be looking for. And you can see how the stock has retraced. Please make sure that you're going and checking the Twitter account. This is a brokerage downgrade. Really didn't have any material news on the company itself, but it was going to generate a little bit of selling pressure. And last week, Harry and I were both loving TMUS. So I'll let him take a look at that. But I wanted to do something a little bit different. So AMD was the pick that I liked. And the reason that I liked it was we had this breakout candle right here. And then Wednesday when we recorded, the stock tested half of this long green candle and it closed on its high. And both of us were telling everyone, stay long, stay bullish. So Harry, why don't you tell us, a little bit about TMUS? It's done well.
Let's see here. TMUS. I had TMUS and Meta as my picks, I believe. TMUS, when I picked it, let's see here. It was at around 163. It's now dropped today, but if you picked it last Wednesday, you could have gotten out of there around 165. And then Meta, of course, Meta's just been like a rocket. That there would have been a nice almost $25 gain on that from last week to this time. So looks like both of those picks would have worked out well. I just went long DKNG right before we started. I like the news that just came out on it. I like the chart. There's a little bit of trend line resistance right at around 39.50, but with this type of news, I think it can break through. So I grabbed 20,000 shares quickly at 39.20, which is where it's at right now. I'm still sitting. I sold my MDB at a nice profit, about $8 profit there on 15,000 shares. So that one, I held it for over a month, but that one worked out. Marvel, I'm still holding. I have it at a price point of around 65.40. It's 40,000 shares of that. It's now at 72.84. I'll probably sell it at 75, take a nice $10 gain. My Amazon pick, which I have 500 calls on, is up around $2.50 a contract at the moment. And because I got those options expiring right after earnings, they're holding their value really well. My only dog at the moment is MSTR. Obviously, I got assigned the 545s last week. I'm still holding the 500 puts that I sold this week. I'm looking hopefully for a little rebound off of support on Bitcoin at 38,200. So, which seems to be holding for the moment. So I'm not too worried about that one, but it stands out as the only loser in my portfolio. Other than that, I'm liking the market,
Awesome.
liking the all-time high, liking the economic numbers that are coming out. It's all about rate cuts, as we mentioned last week. That's why good news can be bad news. The better the economy is, the less likely they are to do rate cuts. But, other news comes out like rent inflation going down. When you see that, rate cuts become more likely and so on and so forth. But this year's just going to be a back and forth trying to guess what the Fed's going to do around rate cuts. And that's what the market's going to respond to until we get into election season.
So here's the beauty of what Harry does. He posts every trade and his size, entry and exit immediately. He's like an octopus. And he's posting it to our chat room. He's posting it to Real Day Trading, I believe in the Discord. He's posting it to his Twitter feed. So there's never any question what his track record is. I don't even do that. And to be frank, I'm not trading right now. I can't trade. I've got way too much going on with Option Stalker Pro. My goal is to keep you on the right side of the market. I've been doing that to give you the play-by-play during the day. But when I'm trading, that's all I'm doing. That's all I want to do. So when somebody contacts me and they've got a support issue with Option Stalker Pro, it's kind of a pain in the ass for me because I'd rather be watching NVIDIA and monitoring that trade. I'm not writing articles. I'm not developing new features for Option Stalker Pro. So when I have positions on, I'm preoccupied with that. Well, one of the hardest things for me to do was to stop trading. Been able to do it. It's been about a year and a half. It's still calling me, but I have to stay on this path. Doesn't mean I don't know how to trade. You can go back into every video and you can watch just like we did today. What did Pete suggest? Why did he suggest doing it? What was his call on the market? How accurate has he been? So Harry, just follow his trades, follow his P&L. You're going to know he's in there trading it every day.
That's what's so important to me, which is, I obviously post large size trades, but that means it's confirmable in time and sales. If I was saying I was taking 3 contracts, it can get lost in there. Did you take it? Did you not take it? But you could see if I'm saying, all right, I took 200 calls on Amazon or whatever, I have 500, but you could see it in time and sales. You see the trade that I'm making. So people can criticize and there's always going to be trolls, but at the end of the day, it's okay. Well, it's verifiable. You can look and see, I took this trade. I closed this trade at this price. You can see what the profit is. There's no doubt. And that is a standard that every single person out there that is, trying to teach you or tell you, hey, I know how to trade. This is, look, if there are plenty of gurus out there that you can follow, and I'm sure they charge you a pretty penny to do it. I just want to make sure that people who are looking at this as an opportunity to make a better life for themselves do it correctly and don't get scammed. Pete offers an amazing service. We have that, he's got this Option Stalker, which, if you're looking to trade the system that I trade, that Pete teaches, there's no better software to use. We have a chat room filled with professional people. I've been a member for, I don't know, God, how many years now?
I think
I'm not an employee of it. I don't own any of it. I just, when I joined this service, it expanded my trading. And so, I'm happy to do these every Wednesday and hopefully it helps people. Like in this move on DKNG right now, I'm trying to figure out when I might get out.
So let's real quick talk about the screen display that I have here. As Harry mentions a symbol, I'm going to type it up and you'll see it in the primary screen here. I'll use the D1 chart. Look at that beautiful breakout right here. On the right-hand side, you'll see an M5 S&P 500 chart. And so let's get into a little market analysis right here. We had the gap up today, again, 5-minute chart, and we had a little bit of a pullback. This is when we want to be very patient, especially on gaps up. Most of these moves are going to be challenged. So even though we're really bullish on the market on an intraday basis, it does not mean that on a gap up, we come in and buy, 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 buy. Oh my gosh, I got to have everything. That's what FOMO Joe does. He can't resist temptation. So he comes in and he buys everything in sight and then he gets flushed out. Sometimes these gap ups reverse completely, and you are going to be very, very stuck if you're not careful on the open. What we like is half of the gap to be preserved, which it was. Long red candle here. Then we start marching higher. I didn't believe in this rally until we had this new high of the day. I wanted to see a bearish cycle. I had a little bit of a dip here, and it wasn't until right here that the 10P indicator crested. I did not like that candle and that candle because this long green candle was instantly erased. That is a sign of selling pressure. So what do we do with that? Well, if you're long stocks that have relative strength, and you're going to continue to hang on to them and you want them to hug the high when you see this type of price action, but you're not adding until that support is confirmed. So right now we've had a bearish 10P cycle. I'd mentioned to everybody, I'm looking for support at the VWAP to be confirmed. I want to move sideways. I don't want this market to get ahead of itself, because this is what happens when the market gets ahead of itself. There is profit taking. So now we've got that compression above a VWAP. We've got a bullish cycle that we're working with. Now we want to see a nice steady grind higher, and we want to take out the high of the day within the next 10 minutes or so. So that's what we'll be watching on the right-hand side of our screen while we continue the live event. And let's take a look at what's got Harry so bullish about DKNG. Really nice breakout here. So we break out, we've got a bullish flag, and we're through horizontal resistance. And look at that long green bar. And you can see the stock is pretty choppy in here. So anything related to the price action today that you want to talk about, Harry?
I mean, just that news release caused a pop over VWAP, and then it continued up. It didn't retrace. It broke through the H plus trend line that starts at 12.4. And it also now broke through horizontal resistance, which was at around 39.35. So I have two breaks of resistance. I have a news catalyst that hasn't retraced. I have a stock that's been, not exactly beaten down. So it's not, not a bottom feeding stock, but a stock that's been on a nice steady rise ever since December, right? Back in 2022. So the last year, this stock has been climbing from, it's almost quadruple its price at a nice steady couple of bumps here and there, but it's been heading back up. So I like where it is on the D1. I like the price action today. So overall, it's it's not a huge trade. It's just something I noticed I wanted to grab before it shot up even more. I think if it can break 40 today, I could probably ride this to around 41, 42. If not, I'll just take profit at the end of the day. But it's one of those trades that just caught the corner of my eye. I wanted to hop on it.
It's kind of funny. It has nothing to do with trading per se, but when I watch TV these days, it seems like every other ad, at least 20% of the ads, are gambling related. Mm-hmm. And DraftKings is just one of them. Then the other half is all pharmaceutical related. Whatever happened to beer commercials and car commercials? Now it's all pharmaceuticals and gambling.
People can't afford beer and car anymore because they've lost it all on gambling.
That's right.
That's probably
okay.
It.
So let's take a look at the market here. I had mentioned I want to see this breakout. What I do not want to see as a bullish trader today is I do not want to see resistance here during this 10P bullish cycle. I want to see us get through that level. A lower high double top with red candles that break this VWAP, that would get me into protective mode. That would get me into profit taking mode on my longs. I don't need to make that decision right now. I'm watching to see what happens. We could go either way. We get through the high and start grinding, and be glad I stuck with my longs. The stocks with relative strength, if we do get that bearish pattern and we do break below the VWAP on SPY, those stocks with relative strength are going to hold up very, very well. That's our cushion. And so we get that long candle through that VWAP. We're going to go, okay, you know what? This is a good time for me to take some risk off. And I'm writing an article. I'm about 5 days into it right now. It is on, Pete, where do I place my stops? Well, it's such an involved topic. You need to look at every trade on an ongoing basis, and you need to analyze what the market's doing, what the stock is doing, what your expectations were for it. And why would you wait to be stopped out here? Let's say this were a stock. Why would you put your stop all the way down here and wait for it to come down when you have confirmation of resistance all the way up here? You wouldn't. You should be starting to exit the trade. So watch for that article in the next probably 5 days. I'm going to try and finish it off. But that's what we're looking at right now in terms of day trades.
I have sort of obviously a lot of people know counter logic on stops. I don't use them. And I don't use them for a couple of reasons. One, I'm always watching. Number one, I'm always watching the chart. I don't walk away from them. So, right now I'm watching DKNG, I'm watching Marvel, I'm watching MSTR, I'm watching Amazon, I'm watching all of them. Right in front of me, I have 4 monitors. One monitor has all my positions and the M5 chart right on it. 2, I trust myself. A lot of people use stops because they put it in and they lock it in and they don't trust themselves that if it hit, all right, I'm going to sell at this point or hold at this point. They don't trust themselves that they're going to do that. Psychologically, I know if it hits the number that I don't want to go past or number I want to take profit at, I know I'm going to be able to close the trade. And also, I feel that a lot of things are contextual. For example, I had, you put alerts, just like alerts, right? You put an alert on. I had an alert on Moderna today at 103.50, it triggered. But I didn't go long on Moderna. Why? Because 1, it was in the first 15 minutes of trading. 2, I know the stock, obviously, pretty well and know it has a history of breaking through those alerts and then coming back down. I like to be able to be flexible enough that if I could see contextually, okay, it just would, if this is where my stop would have been, it just broke below that. But contextually, I know because the market just dropped and there's a reason for it and I feel it's going to bounce back up. I like to have the flexibility to be able to hold the trade or not hold the trade. I don't like to see my stops getting triggered all the time. But I recommend strongly, if you are a new trader, even a moderate trader, you've been trading for a while, you have some success, to use stops. Don't do what I'm doing until you feel that you've reached a certain level in trading that you're confident you can be profitable and not use stops. I'm just saying that's what I do. But I've been trading for a while and I'm a profitable trader. So, but that's a point where you get to evolve to, I think. I strongly recommend using stops, reading Pete's article and using them correctly in the beginning and even as you progress in your journey. They're very important.
Now that I've written it, I probably 2/3 of it was the old sports adage, the best defense is a good offense. And if your offense is scoring a ton of points and the other team can't keep up, well, that's a good defense. Well, in that light, when you're entering a trade, that's your offense. The stop is actually your defense. So how do you improve your stops? You improve your offense. You select better stocks and you wait for all those check boxes to be marked. And so I go through a bunch of different scenarios. I mean, if you're constantly getting stopped out, the problem is not where you're putting your stops. And that's typically what we hear is, Pete, how can I improve my stops? I always seem to stop myself out too early and then the stock goes higher. Or I'll have a nice wide stop, but then I'm losing a lot of money. If you're getting stopped out all the time, you need to improve your entry. You need to improve your stock selection. You need to improve your awareness of what's going on with the stock and the market. That's where the real problem is. And then to your point, Harry, for me, stops are just such a minor part of the overall trade consideration. I'd put it at maybe 1% of my analysis goes into where my stop might be.
Oh, by the way, Brian Tenna, don't use cup and handles on the 5-minute chart. They're completely useless. Just don't bother with them. A lot of that shit, you know, on your 5-minute chart, look at VWAP, look at AVWAP, look at where your support and resistance levels are in the daily chart, and if the 5-minute chart's rubbing up against them. Look at the 8 EMA if you want. Even look at a 3-8 cross if you want. But you know, once you start getting into cup and handles and this and that, it just don't. Trust me. But the only people who are looking at that are other retail traders. Do you know how much retail traders matter in terms of the price movement of these stocks? Very little. Do you think that retail traders looking at a cup and handle on Marvel on the 5-minute is enough to move the price? Because institutions are not looking at 5-minute cup and handle patterns. They don't give a shit. So neither should you. Someone asked the question here. I notice you haven't been taking any SPY lottos lately, or I guess you just mean SPY trades generally. Have market conditions changed such that you don't want to take any, or you're just taking a break from them for now? Well, one, I am taking them. I'm just not posting them. The reason I'm not posting them is because people follow those SPY trades, and you shouldn't be trading SPY. You really shouldn't. You should be trading relative strength. That's number one. Two, why trade SPY when I could trade Marvel, right? Or I could trade Microsoft here, or I could trade Amazon here, stocks with relative strength. Look at SPY dropping. Look at what Microsoft's doing right now. Why not trade Microsoft long right here rather than trading a SPY long? Because if SPY drops, guess who's not going to drop or not drop as much? Microsoft isn't. You just watched it. You just watched SPY in the last 3 candles, 3 red candles here, dropping. What has Microsoft done? It is consolidating, and now it's actually going back up. That's what you should be trading. You should be trading the Microsofts of the world during days like this, not SPY.
I had a question regarding VXX ticking higher. Is that a concern for us? Which a few weeks ago, we actually did have VIX ticking higher while we were doing our presentation. And there was a 0 DTE, huge put purchase that actually did put some pressure on the market later that day. Could that be in play here? I think it's always good to know where everything else is trading. VXX is one example. If you go into the D1 though, you can see this is a huge drop. Am I going to read too much into a little pop here? It's so oversold. It might even have a short covering bounce. I'd need to see it make some pretty considerable moves higher. Could it be suggesting that this is a lower high double top forming and that we might break down? Maybe, but VIX, you know, the tail doesn't wag the dog. It is a function of what's happening in the S&P 500 that matters. So we need to see that confirmation with a long red candle through that VWAP. Then we can go, okay, you know, the price action in SPY is pretty weak. So keep an eye on it. TLT is something else you should be watching. What are bonds doing? And right now, bonds are a little bit weak in here. So we've got a little drag on the market currently.
By the way, you hear what Pete just said? Bonds, drag market, all that. If you don't understand that, right? If you don't understand, well, what do bonds prices have to do with the market? What happens if yields go up? What happens if yields go down? Look, ChatGPT. Hey, how are bonds correlated to the market and why? Boom. 2 minutes later, you're going to have a detailed answer there. Use it. If you hear something, look it up, and you don't understand it, look it up. Don't just brush past it and be like, oh yeah, bonds do this, and then you repeat it to someone else like you know what you're talking about. Just look it up and find out why. It's just a good general rule on anything in life. If you're reading something, you're reading a book, you're reading an article, someone says something, you read something, whether it's finance or not, and you don't understand it, it takes 2 minutes to look it up and understand it, and then continue on. If you do that every time, your knowledge will... And it's just something that you should just get used to doing. I have a question here from Great One Goofy. You always ask good questions. Seeking your thoughts on D-Dog. Heavy selling last couple of days. I'm holding it for the last week or so, and it's still in profit, but the price action seems bearish the last few days. The old me would have averaged down on this, but the price action tells me to be cautious, and if the stock closes below the 8 EMA today, it's time to get out. I did not see any major news anywhere about D-Dog, just wanted to confirm my exit plan is good in the stock. Slight correction, bearish, not the right word, but definitely caution and take my profit here. So let me take a quick look at D-Dog. And then, it's always good, first off, look at the rest of the sector, right? So take a look at, take a look at Snow. Snow is up today. Take a look at Crowd up a lot today. Take a look at D-Dog down today. All right, well, number one, why are all of its competitors up and that stock is down? So that's a warning sign for me right off the bat. So that's the first place my head goes when you tell me the market's up today, that stock is down. All right, is it a sector thing? All right, is there a sector problem with security software stocks? No, there isn't. So there's a problem with that stock right now. There's selling going on in that stock. The movement that I'm seeing in that stock is institutionally driven because I'm looking at above average volume here. I'm looking at the last 2 days, it's already above its average. The average volume on the stock is 3.578 million. Today's already at 5.2. That's some pretty heavy selling. The only benefit thing that I could see here is that it's bouncing off the 15 EMA on the daily chart. So, you can use the 8, you can use the 15, depending on how conservative or not you or liberal you want to be on this. But I would say this is probably a good place to take profit. I don't know what is going on with the stock, and I really wouldn't care at this point. I would just see everything else is going up. That is going down. It's on a day where it should be going up, and it's not. If you're currently in profit, take it. If look, obviously, if you could hold D-Dog for the next 8 months, is D-Dog probably 8 months from now going to be higher than 125.88? Yeah, it most likely will. But if you're day trading this or you're swing trading this for a few days and you have profit, take your profit and move on. There are better places to put your money than in D-Dog right now. Put it in Microsoft, put it in Amazon. There are plenty of places that aren't weak today. Use those.
Along those lines, so you're in D-Dog, you've bought this breakout right here, everything looks great. Hey, the stock is moving higher. This is fantastic. You're looking at what's happening in CRWD and some of the other peers to gauge that strength within the group itself. And you can see I've overlaid here, the gray line is CRWD, and then you can see how D-Dog has performed relative to it. When you see a long red bar here and the market actually puts in a nice day yesterday, and you see that its peers are powering higher, this is not what you expected. When you see all the other stocks in that group go higher, you're expecting D-Dog to go higher. As soon as your expectations are not met, you should be on high alert with that trade. Hey, maybe D-Dog's not the fastest horse in the race. Maybe if I still like the group and the group is still performing well, maybe I should switch out here and go into CRWD.
You know what stock I like today? And this stock, I remember, there was a time where this stock was like the most talked about stock. It was one of the most traded stocks. Take a look at Google. Now, right off the bat, you see starting at 1129, you can connect 1129 to 1220, which connects to 111, which then gets connects over to 119. Misses that a little bit. And then today pops right above that trend line, right above it. Nice gap up, nice break of a small bull flag there. Couple of breaks of compression. Google's had a really nice run. It's running hot into earnings. You still have about 6 days before their earnings is announced. For a day trade, even for an overnight swing trade, I like Google here. I like the price action on it. I like the stock. I don't think you can go terribly wrong with Google. I don't know if it's my pick of the day so far, but I do like Google right now.
Looks nice. I mean, that D1 chart has had a beautiful breakout here. It is one of those stocks. It's a very thick stock, as I call it, lots of volume, lots of activity, lots of institutional ownership. These stocks don't tend to make big moves very fast. So you can see the general trend has been easy to get behind, a little bit more difficult to time the entry and the exit. So if you're a longer term trader, you just buy and hold and ignore some of these wiggles and jiggles. If you're a day trader, then you wait for those pullbacks, and that's where you can find a nice entry point. So you don't chase this. You understand that it is a relatively choppy stock, and you wait for that higher low double bottom. Okay, this is a good entry. Then you would take a position.
A question here. Hi, Harry, would you say this environment is more suited towards swinging or day trading, being near all-time high and all with the uncertainty of it will keep going higher or not? Well, first, don't think like that. It's almost a built-in human condition, right? Let's take a look at the video for a second, right? Pete mentioned it earlier. You know how many people were saying when the video broke 500, all right, it's going to pull back here. Saw people shorting it. All right, now it's at 530. No, it can't go higher than that. Then it's at 550. Then it's at 560. Now it's at 622. Apply that thinking to NVIDIA. You never would have made a dime on it. In fact, you probably would have lost thinking, all right, I'm going to short it here. This is a good place to short. It's reaching a top. It's not reaching a top, is it? Same thing with the market, same thing with anything. Just because something's at an all-time high doesn't mean, oh, now it's due for that pullback. No, it doesn't have to pull back. That's why overbought and oversold does not work. Because, yes, are they real? Is overbought and oversold real? Yes, but there's time frames on that. Things can stay overbought or oversold for a really long time. And when you're talking about something's overbought and oversold, it's just a fancy way of saying I'm trying to time the market. Don't try to time the market. Look at the price action you're seeing right now. Is SPY bullish? Yes. Is it heading up through an all-time high? Yes. Is there any material change out there to pull this back? No. In fact, what will happen and what you should keep an eye on, because the only reason I hesitate on a lot of swing trades right now is this market is at an all-time high based on valuation of these stocks. This earnings season has very, very high standards on it. Why? Because the market is at an all-time high. Whenever a market is at a high like this and you have earnings season coming up, it puts a lot of pressure on those earnings. What that means is that even if these stocks hit expectations, you might see them drop. You need to have stocks, because the market doesn't look at today. It looks at a year from now. It looks at a year and a half from now. That's the price action you're seeing is not rooted in what's happening now, but what they think is going to happen in 2025, mid-2025, 2026. So those earnings have to show something to justify this high level at the market. That is what could pull the market back. But until then, play what you see. It's a very good day trading environment right now, certainly. If you would have taken Microsoft when I said, you'd be up over $1 right now on that stock. If you took an option, you'd be up $1 call. Because right now, there's nothing standing in the way of us continuing to go.
I have a question here. If you are buying dips, isn't that contra to trading relative strength? Absolutely not. You can't be looking at a 5-minute chart and expecting that the stock is going to maintain its relative strength constantly on a 5-minute basis. It's going to go in and out of phase. Look at NVIDIA today. It made a move from, let's call it $600 to $620. Do you think it's going to go to $650 before it pulls back somewhere? Of course it's going to pull back. And so this gives us an opportunity, right click, create alert, select the parameters. I'm going to go with, I could go with HA reversal, LRSI, but I'm going to go with real relative strength on a 5-minute basis. I'm going to add that and click save. If I would have done that, as NVIDIA is pulling back, you can see that the real relative strength went below 0 and then above 0. This is your entry point right here, way above VWAP. And I can evaluate what the market has done and I can evaluate what the stock has done when I get that alert. On a daily basis, would you call that any kind of contra trading to relative strength? Heck no. My God, this thing is a rocket shot. It needs a launch pad. This thing is going higher. So on a 5-minute basis, we're not paying attention to 5-minute basis other than to help us time our entry and our exit. And the same would be true for a 200 period moving average. Do you think that a 200-day moving average might be more relevant than a 200 period moving average on an M5 basis? Yeah. So you pay attention to what's going on a daily chart, a D1 chart. So no, it's not counterintuitive to buy dips because then it's relatively weak. But I will tell you this, that if when I have this alert set, if I see long red candle, long red candle, long red candle, stock retraces that entire move and I get the alert way down here, yeah, I probably shouldn't be taking that one because I'm looking for a brief, shallow dip where most of that move is preserved well above VWAP. Huh, I got all those. Oh, that's probably a pretty good entry point for NVIDIA, especially considering that the market looks pretty strong.
Someone's asking about snow here. Let me see. Broke out, hasn't closed above 205 resistance. Well, it looks like it'll do that today. They've continually touched and rejected for the last 2 years. Yeah, I see that. I see more around 204, but yeah. I don't see any resistance right now on snow other than, I mean, it's got earnings far away. Not until probably, it broke through a couple of trend lines here. 222 is the next resistance spot that I see on snow. I like snow. I think it's a good, long. I think it's a good long here. So I would not worry about going long on snow.
Yep, that's a nice breakout. Yep, through all those horizontal resistance points. Now I'm going to make another point that I made in my stop article. If you are trading snow, look at how god dang choppy this freaking thing is, okay? If you're going to go into a stock like this with a stop, you're going to get stopped out all the time, all the time. I go into the 5-minute chart and I can see, hey, look at this. Oh, gap up, looks great. Just this long pullback right here tells me all these pullbacks and dips in here tell me I need to be a dip buyer. I do not need to be chasing the new high of the day. Because if I do that, no matter where I put my stop, even at VWAP, I'm probably going to get stopped out. Here we go again. I just got stopped out for a loss on snow, and there goes the stock right higher again. And there I am on the sidelines. I took a loss and I should have made money. So you have to know what the pattern is behind the stock. And if you take a look at the D1 on snow, guess what? It's pretty dang choppy too. Everything looks good here, looks good. Compression. Well, I wouldn't be in here because the stock's starting to lose its relative strength during a compression with overhead resistance. All right, so go to the sidelines. If you get that compression breakout, then you can get in. But why sit around in a stock that's not moving as you'd expect and then woof, there comes the drop, and now I'm going to get stopped out. Ooh, there comes a rally. I'm going to buy it again here. That is the danger of using stops, especially with a choppy stock.
Someone asked here, how can you enlighten how to estimate projected next resistance level when a stock breaks an all-time high? Let's say NVIDIA, AMD, SMCI, etc. Better avoid these, only re-enter upon pullbacks. I love all-time high stocks. There's no bag holders up there waiting to sell. sometimes you can get a good trend line that will give you a resistance point. It's usually going to be an H plus trend line that you can draw, and well, it has to be an H plus trend line if you're an all-time high, that you can come up with a very good point. If you don't have that, there is such thing as psychological resistance points. For example, on SMCI 500, right? That's a psychological stopping point that traders and institutions will have on a stock like that. You can look at AMD 200 becomes sort of a natural psychological stopping point. Round numbers at the 200 level, or 150 or 250 or 300, those levels can become psychological resistance points, and use those.
So I'm going to go into NVIDIA since that was cited. How do you know? I'm going to show you how you know. And you don't have any overhead resistance at all because it's making a new high. So what we have to rely on is price action. And so just like we would do in here, you can see how NVIDIA back in November is making a nice steady run higher through all the major moving averages. So what do I do here? I'm waiting for that compression. I'm waiting for this momentum to slow down. I'm waiting for tiny green and red compressed candles. Then I know I need to get out. That's telling me that there's resistance. How do I know? Because sellers are keeping a lid on that rally, and we've reached a point where the stock is hitting that resistance, so you can take your profits here even though you're making new highs. Have we seen anything like that in NVIDIA so far? No. Every single dip has been gobbled up, and every profit taker has been met with demand, and the buyers are getting more aggressive. That's why you don't see any dips here. That's why we didn't see any dips in the S&P 500 since the beginning of November. That is why we are long right now. So if you start seeing some red candles off of the high here, you have a bearish engulfing candle on NVIDIA. Let's say tomorrow we come in and there's a long red candle that erases this entire day. Ooh, didn't expect that. Well, I want to see that red candle recovered instantly. And now it can't. So now you're starting to see this horizontal compression. Okay, get out of the stock, put your alert at the previous all-time high. If it breaks out and it stages another leg higher, you're going to know about it. But until then, sit, wait, and see what happens. So if you start seeing those red candles or those tiny compressions like this, that tells you that there's resistance building. We're going to be watching for the same thing in the market right now. So let's go into a D1 SPY and see what happens. So you get this nice run up here, and now we start waffling around. These tiny little bodied candles can't quite make a new high, can't quite make a new high. That's because sellers are active and they're keeping a lid on the action. We can expect a dip. Get out here, wait to see how big that dip is, how deep, how long in duration. Oh, it was brief. Boing, we're right back up. Okay, we're back in all systems go mode right now. That's how you tell. You don't have to have overhead resistance. You just have to know how to read price action.
I'm going to run through a couple of these. First, Dallin, you said you have a low plus trend line in Apple that just broke 11.13 to 12.4. I see your trend line, but that trend line was broken to the downside on January 2nd. Once that trend line breaks to the downside, it is no longer applicable. You can't just keep that trend line in place now and say that it's offering resistance. I do see it. I see it bumping up there, but it's not an effective trend line once it's been broken to the downside. So keep that in mind. Thoughts on Tesla? Tesla has earnings tonight, so that's my first thought on it. You probably want to avoid that. You certainly want to avoid it as earnings. That's first. Second, a lot of people are thinking, well, it's all beaten up right now. Earnings, the bar is low. Maybe I'll just go long going into earnings. Again, bad idea. I'll give a little taste of what I might be writing about in an advanced wiki. if you look at Tesla, and if let's say you're determined you're going to play something on Tesla here, right? And I've been known to play earnings, obviously, and the official stance is we do not play earnings. This is what I would do if your heart's set, right? Is this Tesla's average move on earnings over the last 3 to 4 quarters has been around 9.5 to 10.5% on average. Right now, if you look at the implied move on Tesla over earnings, it's about 6%. So what you could do when you see that, when you see the market makers are putting in a much lower implied move than is typical, you could do a strangle, right? You could do a strangle on it because the thesis here is that if it sticks historically, it's going to exceed the priced in implied move that the option pricing currently has, right? So you can go on to something like Tesla and you can put in, because the options are cheaper than they normally historically would be going into earnings, and you can do sort of like a 220 205, which cost you buy the 220 calls, buy the 205 puts, cost you around $8.73 for both. And as long as you get a move that's going to exceed the implied move of $15, which is below the average historically implied move, you'll make money on that trade. But that's sort of more of an advanced technique. If you're not at a point where you can be doing those type of plays, then, which almost all of you aren't, avoid Tesla like the plague right now. Not only because it has earnings, but even if it didn't have earnings, I'd avoid it because it's got a very bearish daily chart, and there's no reason to short it today. So unless you could short it, I would not go near it.
So in Option Stalker Pro, you can see this is our pre-earnings option page. It shows all the companies that are going to be announcing today after the close or tomorrow before the open. This is your last chance to trade these stocks. Great resource because you can go in and see who's on deck. It's not just who's on deck. Do I have a position in any other companies that belong to that same group? Because they could be a sympathy play. So, we had a member who posted that he wanted to stay long, I believe it was PHM, a home builder, and he knew the risks. He was aware that DHI was going to be posting earnings. DHI dropped after the number. So did every other home builder. So this helps you see which companies are on deck. I've gone through and I've calculated what the expected move is right now based on option premiums. And I've done the same over the course of the last 3 years for every stock going into the earnings announcement. So I've seen what that expected move is, what the average move is, and the number of times that it's been exceeded in the past. And you can see on Tesla, about 6% of the time the stock has exceeded the expected move. And we use this information. We have a earnings calendar strategy that was developed by Dave Wise, which has been very successful. Many of you trade it, and then you can go in and you can look. This is probably the most important column, the percent times exceeded, but then also the difference between this week's option implied volatility and next week's option implied volatility is also a critical component of that. So that gets a little bit into, as you said, Harry, more advanced strategies, but I wanted to show you that resource.
Sean, as do I anticipate this bull run will continue in the next few days? What do the charts show you? Well, if you asked me on Friday, Thursday, I would have said, yes, it's we're going to continue, and we have. And I've been saying that. I've been saying we're just going to continue up. We're breaking the all-time high, and there's nothing in the way of it. However, tonight you have Tesla, you have ServiceNow, you have IBM. Those are going to have outsized importance. Institutions are going to be looking at each of those as a bellwether as to what the earnings season might bring us. So the market is going to be very sensitive. If we see big misses in ServiceNow, IBM, or Tesla, or two out of those three, the market might then have a retraction. So I would be very careful over the next few days. If you're in profit on your longs, this would be a good time to take them if you don't want to risk. because there's going to be, like I said, that oversensitivity at the moment to earnings coming into this season. And there's some pretty big earnings coming up tonight. So that would be my caveat or worry about the market. And remember, technical analysis works, all else given being equal, right? All else being equal, regular day, nothing, technical analysis, it's sort of like your GPS, right? All else being equal, you put in an address, it's going to tell you how to get there and how long it's going to take. If there's an accident on the way, you're going to get rerouted. If there's a cause for unusual traffic, the time you're going to arrive is going to change. All else being equal, that estimate when you first put it in is going to be correct. You'll get there within a few minutes of when it says. But if something happens, then that can change and you can get rerouted, in which case technicals kind of go out the window. So, the reason why, if technicals were always 100% correct, we'd never break support and we'd never break resistance. They would always be in between the two. The reason we break support and resistance is usually because there is a reason behind it. Right now, we have reasons for SPY. Technically, if there was nothing else going on, yes, SPY, objects in motion are going to stay in motion. SPY will continue to go up. But there is a potential accident ahead or a potential clearing of traffic ahead, and we can accelerate. So I would be a little bit worried about that. Pete already went over Home Depot Doom Biscuit earlier on, so I'm not going to repeat that. Pete, do you have anything to add on where SPY might be going?
Yeah, I do. I'm as bullish as can be, and I have been for a long time. And my expectation into here, if you're a swing trader, in here, and here, and here, somewhere along the lines, I'm expecting a dip. Does that change the way that I'm swing trading? No, I haven't seen one yet. Every freaking red bar that shows up on the chart is erased the next day. Okay, well, I'm mentally prepared for a dip. The fact that I'm not getting one is actually very bullish for me because that shows me that buyers are very, very strong. Okay, now we start getting here to where the market is starting to compress near the high from 2023. Well, if I'm a very short-term swing trader, I'm doing weekly call debit spreads, or maybe I like taking trades that have a week or two till expiration, then yes, I need to be a little bit concerned here because a dip is going to take possibly 1 or 2 weeks out of my trading plan, and it's going to take a lot of time for the market to recover. Time is my enemy if I'm long premium. So yes, here I would be taking profits if I were a short-term trader. What is my mindset if I am trading a month or two out? Well, in here, I'm not getting out of anything. I like the stocks I have. They're all super strong and showing relative strength. I am mentally prepared for a dip. Even if I get a dip, I'm expecting it based on this price action to be brief and shallow. I am mentally prepared for that dip. The people who get into issues are the ones who start buying in here and they're oblivious to the price action or the compression. So they're buy those call debit spreads, weekly call debit spreads. I didn't see that coming. Look, the market sold off to start the year and you're completely screwed. Okay. So you're a longer term swing trader. You're willing to weather this. So here we go. Now we just tested the high from 2023. Oh, look, another little dip. No worries. Look, a higher low double bottom. Oh, look, there we go. We're back off to the races. So, well, how would I handle this? We got the FOMC meeting coming up next week. I'm taking advantage of this breakout here to a new all-time high from Friday. Yes, we should expect to see some follow-through trading, some follow-through buying as we start getting into next Tuesday. And let's say that the market lifts off and we have a big old run higher just like this. Okay, we go from 450 up to 470. And the FOMC is pending. and Apple earnings and Google earnings and Meta earnings and Microsoft. Don't you think you should take a little profit in here and see how that news plays out after a big run higher? Yes, if you are a short-term swing trader. Okay, if you're longer term, expect that you're going to get a little bit of retracement and everything will get back on track. So you need to quantify your trade duration and what your expectations are. So I'm looking for a continuation until the FOMC statement next week. I would be looking for opportunities to take gains into strength if my time horizon is a couple weeks or shorter, and I would go to the sidelines and see how those events play out.
You know, it drives me nuts. The people who get they go long on a stock, and then on the M5, red bar, and they start freaking out. They start posting about it. They're going nuts. I mean, you guys remind me of someone who's like, you just went on a date, you texted the person, and it's like, it's been 10 minutes. They haven't replied. Something's wrong. Oh my God, they hate me. No. All right, I'm going to text again. Hey, just checking in. You sure everything's okay? Just wondering if we're still on for tonight. Yeah, keep doing that, and you're not on for tonight. You need to fucking relax. Seriously, that's going to happen. Show me one chart that's just like bang, 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 bang. You're rare. You get them again, but rare. You're gonna see oscillations. You're gonna see some selling going up. Stop micro focusing in on these, random M5 bars or little dips down to VWAP. It's A, going to drive you nuts, and B, you're going to get out of some really good trades that you shouldn't have exited. Someone asked, on a break of compression, do I just take the trade there, or do I wait for a retracement? It really depends on the context. I know you hear that a lot, but I mean, take a look at SMCI, right? SMCI breaks compression on 119. And it just, if I waited on that break of compression for a pullback, I would have missed the entire move, right? And it's obviously continuing to move today. But on other times, it depends. Is it an M5 compression? Is it just a small compression right below VWAP? It breaks above VWAP. Yeah, I'm going to wait for that to confirm. Is it a daily compression it broke through on strong volume? I'm probably going to jump in earlier than I would have. So there is certainly a lot of context involved. Lately, Lester, roughly what percent of your trades are pure intraday trades taken for relative strength, relative weakness? All my trades are taken from relative strength, relative weakness, pretty much, unless I point out it's not a technical trade. But I'd say around, intraday trade, probably 30-40%, and then the rest are day trades over 1 to 2 days. But any comments, Pete, on any of those?
Well, we do have a new market high right now, so that's good. And this little move that got ahead of itself was checked. VWAP held. We had a bullish 1OP cycle. We've been making nice series of higher lows, nice grind, nice float. We're at a new high of the day. We still have a little bit of this bullish cycle left, so we want to continue to just float and grind higher. Shorts are not going to get in the way of this freight train. So for the rest of the day, I am expecting the market to move higher based on the price action. So in here, we didn't need to freak out. We needed to be aware that there was some selling pressure. We wanted to see it resolved with a compression here and a nice grind higher. So we have that. We're still in our long positions. The stocks are moving higher. No worries. As far as a stock that I like, I'm going to highlight JPM. And it's not really doing a whole lot right now. And that's okay. And let me take a step back. Everything that we've been showing over the course of the last probably 2 months has been tech related. Okay. I'm trying to give you something outside of tech that I think is going to perform well. Because yes, we want to be in the semiconductor stocks. Those are what are moving right now. But I do like what I'm seeing in JPM. You can see that the stock pulled back. There's your earnings announcement. It found support. We have a higher low double bottom on a 30-minute basis, and it's been just gradually grinding higher. And so today we can see how the stock has been floating higher. It's near the high of the day. It didn't really have any of this big volatility. I think JPM is going to continue to grind higher. And we've got the GDP tomorrow. That's our first look at Q4 GDP. They're expecting 2.2% increase versus 4.9% the previous quarter. So expectations are that the economy is softening. Is that bad news? The Fed is probably going to take that into account, and maybe they are a little bit more inclined to cut rates sooner if that 2.2% expectation is met. So I'm not putting a lot of weight into GDP. The PCE is Friday. That's going to be an inflation reading. This is, again, the advanced GDP. Very important because they keep recycling that number and updating it. In general, GDP is very backwards looking. I don't put a lot of weight into it, but the first reading I do take into account. So that could be an influence tomorrow. But yes, I like the fact that JPM is above the AV WAP-E and it's starting to gradually grind higher. This is a bullish flag formation. You can draw your trend line right in here and see that we've been able to get above it. And all of these gains have been able to hold after major bank earnings announcements. So some of the fluff came out and now buyers are still back in supporting that stock in that sector.
Look at the relative strength on Marvel on this pullback right now on SPY. That is NVIDIA. Those semis are just powering up. Even with there's a decent red bar on SPY right here, and Marvel is unfazed by that. So that, by the way, is when someone asks why not play SPY. Look, if you were long SPY here and you got this pullback, but you were also long Marvel, you'd be much better off being long Marvel, obviously. So you can look at what the sectors today: finance, tech, and energy. When those three are up on the day, usually you have tech up and energy down, or right. When you have all three going full steam ahead, that is usually a pretty good sign for the market in general. I just put an alert on AXP at 190. I like AXP over 190. I want to see it break that compression, that high of 190 back on January, 189.51 back on January 5th. I like to see it break clearly through that. So that's why I put my alert on 190 for AXP. But if AXP gets there, I like that as a finance stock as well. And I still really like Snow here. And it's staying above VWAP right now. So if Snow can close above 210, I really like Snow on the, as a pick of the day as well.
Yes, and one of the other reasons that I picked JPM is because it's released earnings already. We've got such a heavy earnings calendar coming up over the course of the next 2 weeks that I wanted to really sidestep that. I know a lot of you watch the live event, but a lot of people watch the recording, and it's a good 3 days before I do another recording. So I can't update very often. That's another reason I like JPM, is because that news is already behind the stock. So we don't have to worry about too many surprises. You can see how the market is actually pulling back after checking the high here. So we want to see it get through here as this bullish cycle completes, and it just not quite able to yet. So, if we make a lower high in here and we get this rollover and we still start forming some red candles and taking out the VWAP, then I think this little rally today could be not trouble. I mean, it could pull back later in the day. We're just not in that go, gotta have it mode right now.
Yeah, I mean, think of if you're an institution right now and you're sitting here at the all-time high and you're pretty bullish and you're long a lot of stocks, but you have some pretty big earnings come up. At a certain point, you're going to take a breather, right? You're going to stop and you're going to wait. You're going to wait to see what's going to happen before you move forward. You might actually relieve some pressure on some of your positions here. Clearly not on semis, right? So you can see where our institutions, when you see these pullbacks, like you see this pullback on SPY, where are institutions letting go of some of their positions, lightening some of their longs, going into a heavy earnings evening? And you could see that it's certainly not in semis, right? You see Microsoft pulling back, you see Amazon pulling back. So you can say, all right, there's some selling going on over there. But institutions are well aware that we're at an all-time high. They know that we have earnings tonight. We also had the 5-year note auction, which came in a little higher than anticipated at 4.055, and that always has a slight, usually temporary, but impact. Those rates tend to have an impact on the market as well. But institutions are well aware of where we are in the market and what's coming up. Expectations. I asked for analysis on. It's so funny. I asked for analysis from JPM on Tesla. Right? Just, hey, what do you guys think? And a politician could not have written it better. You read this and you say, okay, they're bullish. And then you read it again. No, they're not bullish. They're bearish. And then you read it again. They're 50-50. It's written in such a way where everything is so caveated that it can go either way. So then I said, okay, give me some analysis on now, service now. Well, a nice little run up. What do you guys think? Same damn thing. And it's funny, if you use ChatGPT correctly, and you pay for the ChatGPT 4.0, whatever, you can just copy and paste that, put it right in there, and say, okay, read this analysis. Is it bearish or bullish? And it comes back with it's both. It's both bearish and bullish, because that's what they're doing. It shows you that one thing is consistent, which is that expectations are very, very high, almost too high. And when that happens, now Netflix blew away expectations, and that's what you need, right? You need a stock to blow away expectations is going to go up. But what you're going to see a lot of people questioning, I don't get it. They met or beat their expectation, the stock dropped. Yeah, that's going to happen, right? And that's why also playing earnings is so dangerous. That's why you could be given the earnings results right now. I could tell you right now, here are the earnings results for ServiceNow or IBM. And you can say, oh, all right, well, IBM missed, or IBM beat expectations by this amount. I'm gonna buy calls right now, and you still most likely would lose money, because investors could be looking at one particular thing. They could be looking at, oh, what's the backlog, or how much supply do they have, or what is their guidance saying about X or Y? What are they doing in terms of AI? Sometimes it really is a matter of how often and how good the exec team is, if you listen to those phone calls, at selling their future prospects. There are places that actually count the number of times that these CEOs will say the words AI, say the acronym AI in their earnings talks, just to get a bump, because investors, oh, AI, they're talking about AI, they love AI, let's do that. And it's like, it's fucking Home Depot. What is AI? No, but it doesn't matter. Because you throw the words AI in there, and all of a sudden, you get this artificial bump. So anyway,
I just want to give a quick observation on VXX, and you can see how the market was at the high here, and VXX was creeping higher before the market even backed off with that red candle. So this is very suspicious. We're starting to see a couple of long candles in here. We've got a bearish 10P cross coming. We're right above VWAP here. So this is starting to look a little bit toppy to me. I would be a little bit more cautious with my longs in here. Great example. Go back to that Marvel. Okay, again, here you can see. What is it about Wednesdays and us seeing this liftoff, with VXX? We had that a few weeks ago too, and that ended up being a towel that we were going to drop later in the day. But MRVL, again, the point is trading futures near the high here, and being long futures, you're going to take a big hit here versus being long MRVL that's got relative strength. If If you're long futures here on this breakout, everything looks great. Yay, yay. And then you get this whap. Now you're thinking, oh my gosh, I'm going to take a big loss in here. This thing could roll right over. You exit, you stop out. But look, this is where Marvel was. And you can see it's actually higher than where it was at that point. So you're making money on Marvel. You're not making money on SPY. And if this turns out to be something pretty nasty, this stock's going to give you time to exit gracefully without taking a beating versus trading the SPY, S&P 500, ES. You're going to take a big hit. It's our edge. This is what we do.
I'll be right back in a few minutes. Just got to take a quick call coming. It's about to come in.
You know, Harry, I think we're going to conclude the session here. We're kind of at the 1 hour and 15-minute mark. So I think we've covered a lot. We've got a lot of news coming up. And
well, then just to quickly grab the 2 questions here. Thought on SoFi. I don't think about SoFi. It's bearish. It's got an ATR of like 40 cents. So if you take it and you're short, I would short it, but maybe you'll make a nickel. And also, why don't institutions use patterns on the M5? And they do use it on the D1. Well, simple answer, they're not day trading. Institutions are rarely day trading here. They're looking at the longer term patterns. They don't really give a shit about the M5. It's where does the stock end up for the day. So, all right, everyone, I'm out. Thank you, Pete. Fun as always. And let's all watch earnings tonight, see how it affects the market. But until then, stay bullish, watch VWAP on SPY. And right now, as Pete said, I'd be cautious at the moment. Wait to see that VWAP holds, and then we bounce back up. If we don't make a new high of the day, I'd be cautious on your longs. That's it for me.
Yep. Thank you, Harry. We'll see you in the room. I'm going to continue for just a minute. The other reason that we don't use patterns on an M5 basis is because not everyone does that. When we see a pattern on a daily basis, many, many, many traders see that. But very few traders are going to see that on an M5 basis because they don't look for cup and handles. That's not like something that day traders even look for on a 5-minute basis. So it has little relevance to day traders. Then institutions know that it's not relevant. They're not going to be trading for it or against it. And that's why 100-day and 200-day moving averages work. Is everybody's looking at it on a daily chart. They're looking at major trend lines. When everybody starts acting the same around these same price levels, that's what makes them relevant. So yes, thanks so much for watching, everyone. We're going to continue to do the live events on Wednesdays. This seems to be working out well for everyone, and it's right in the middle of the week, so it gives us some clarity as far as, the first few days of the week actually having elapsed. We're able to get our bearings, and then we still have the remainder of the week when we can give you some insights on how the week might play out. So thanks again for watching. We will see you next Wednesday. Trade well.